Hi all, this is Dr. J11 streaming live from Long Island, New York, where it was a perfectly beautiful day until the winds and the temperatures started plummeting as it is now. I hear the winds howling. We're in for a frozen tundra. I guess we're importing it from our Chicago friends. And what can I say? It was a beautiful day, and it was a beautiful day on Wall Street. When the Fed becomes your friend once again, when Powell has a complete change of heart, instead of saying F you to the stock market, says, I was just kidding in December. I didn't mean it. I'm going to be very accommodative. We're not raising. We're never raising. We're going to inflate. We're going to increase the deficit. Don't worry about a thing. We have to. We'll do new QE. We want the market to be happy. Just kidding, said Powell. But, you know, this trick that can't last forever. At some point, the market has to be allowed to do what the market does, and that is sell off. The economy has to be allowed to do what the economy does, and that is go in and out of recessionary cycles and growth cycles. If you suppress it, I think what happens down the road is you pay the piper. But for now, who cares? We're enjoying a banner day on the street. So I'm not going to worry about mortgaging our future for today, because today is today, and after all, we have to live in the moment. In any event, I'm not going to even question what made Powell change his mind, but I'm just going to enjoy the benefits of it, which is a 10-point move in Apple, which was a 70-point move in Amazon.com, which was a 1.75% move up in the Dow Jones Industrial Average. And I'm going to talk about one more name, and that's 22nd Century. I know I've been talking a lot about pot stocks. I think 22nd Century is more play on boutique cigarettes, boutique tobacco, than it is on marijuana, although it is involved with low, what is it called? THC marijuana, the stuff that makes you high. Low THC or no THC, it's we're trying to grow that. I'm not sure about what's been going on. I know there's been a big lawsuit, big drop in the stock price. But today it had a nice bounce, so it got me interested enough to take a look. And I think it's very interesting, so I'm going to share what I found. Okay, so as always, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. What else? Share the link, write comments. I love hearing from you. Give me a thumbs up. If you don't want to give me a thumbs up for today's video, give me a thumbs up for Friday. I nailed the Amazon call. I said it was going to go down to about 1,600, maybe 1,590 before a rebound. I also said the Dow would go down about 500 points through Wednesday. Well, I was a little off. It went down quite a bit on Monday, and it did constitute a 500-point dip from peak to trough, but came back a little bit quicker than I thought it would. In any event, I'm only pleased at that. I give myself partial credit, or actually I deserve a lot of credit for pretty much nailing the Amazon call. Apple, I said, would go down a little before rebounding. I was kind of off on that too. Never really went down much. Amazon did. So I was at least an A-. Well, then again, I'm a pretty generous grader. In any event, let's get to the video charts before I bore you to tears. Here we go, video charts. When Dr. J tries to be funny, it never works. When I don't try to be funny, that's when I'm funny. It's kind of like the stock market. When the stocks, I think, oh, I'm just going to dip my toe in. This isn't, just get a feel a position. Those are the ones that take off. The ones I'm deeply invested in, not necessarily. All right. Enough complaints. Let's look at Amazon.com, which I'm not at all unhappy about. I still have most of my position riding on this one, looking for 1760, 1750, 1780, something like that. I think the action in Amazon was just what I expected. Now we're up against the resistance area that I drew. So, I mean, if it goes through this, I think we go right up to 1780, test that double high. So I'm looking for a push through, what is this area? A push through 1680 or so. We push through that. We get into the next set of parallel lines, the next trading range. We go all the way up to 1780, and that's when the true test comes. Will it take out that double top or not? On its way to new all-time highs or not? Well, one step at a time. Dr. J wants to ring the cash register, get its profits, and then worry about it. Dow Jones Industrial Averages. Looking good, my friends, looking good compared to the way we were the end of the year. My goodness. The day before Christmas looked like the end of the world, and the day after Christmas looked like the beginning of a new bull market, and it sure, not a new one, but a continuation of the old one. And that's exactly what I think we're getting. It's been nothing short of phenomenal. When everyone was despairing, ready to jump out the window on Wall Street, Dr. J was still saying, go long, go west, my friend, go long. Well, at this point, we're right up against the downward trend line that I had drawn the other day. You can look back at my last market wrap on Friday. I even remarked that traditionally trend lines require 3 hits. This has 2 3/4 hits. Now it has the 3rd, as we ended exactly on the trend line, above the 61.8 retrace. My friends, I love that. I love that we're above the 61.8% retrace, because these doggone fib numbers, they mean a lot. So being above that, to me, means up, up, and away. Once we can pass that hurdle, we should start taking out the 12.3 high of 25,980, followed by the 11.8 high of 26,277, followed by the all-time high set on 10.3 of 26,951. We're going to take them all out. Yes, sir, all out. And remember, I told you that this market is not going to end on a whimper. It's going to end with a sis-boom bar rally. I've been saying that for months, 3, 4, 5 months. I was calling for a sis-boom bar rally. My friends, I think we're at the verge of that sis-boom bar rally. If it takes out the all-time high, we're first going to have fireworks. It's going to melt up to that 3,000 level. Yes, 30,000. Now, that's a lot of money, as Howie Mandel would say, if you know who he is. Now you know how Dr. J spends his leisurely time watching Deal or No Deal with the sound off. No, I'm just kidding. Okay, so anyway, this is the Dow. We're in good shape here. Do we go straight up? Maybe not straight up, because Dr. J always here to remind you that markets go up and markets go down. Markets go up and markets go down. We've had a banner day today, and we're up against the trend line. We came off that trend line. I mean, it's entirely possible we have a pullback day tomorrow. Maybe we give back half the gains and then move up for the rest of the week. So I wouldn't be surprised if we have a give back of a couple of 100 points tomorrow, but not to worry. I'm pretty confident that any give back will be temporary and that we will continue this rally. Now, the interesting stock, not that the others aren't interesting. What did I look at so far? Amazon and the Dow. Before I look at XXII, let's just take a quick look at Apple again. Apple, I had slightly wrong. I thought it would go down a little bit more before making a big move. I kind of forgot about the earnings release. The earnings release was very good, and Apple was duly rewarded. Crossing the 50-day moving average. Now, you know Dr. J does not pay much attention to the 50-day moving average, but the rest of the world seems to pay a lot of attention. So that's why I have it on all my charts. Occasionally, a move is repelled by this 50-day and it comes back down. Apple had enough resiliency today to go right through it. Excellent sign. It hasn't traded on the other side, above the 50-day since 10/9. I mean, it crossed the 50-day number of times, but not since 10/9 was it totally above the 50-day. It's still not totally above the 50-day. Now, if we have a positive day tomorrow on the Dow and the Nasdaq, I think Apple will make a clean break of the 50-day. So that would be very nice. Even though I still tell you I don't put much stock in the 50-day moving average, I still would like it to trade above it. For one thing, selfish reasons, I got back in. So I told you when, I think it was right around here and here. And I'm looking for a swing trade to, I'm not quite sure what level, but I'm basically looking to trade the stock. And I'm anxious to ring the cash register, so I wouldn't mind the rally continuing, even though I suspect there might be a give back tomorrow. If there's a give back in the Dow, there'll be a give back in Apple. That's my feelings. And that's actually what will happen. I think we might close at the 50-day moving average. So we might give back 4 points, something of that nature, and then continue on up. Again, I don't want to pinpoint an exact spot where I would be ringing the cash register, but it would be much higher than where it is now, probably about, let's say, 198, right in here, this level. That would be an ideal spot. I would love to ring the cash register right at that number. XXII, should I get back in? I once owned XXII. I bought it for under $1 and sold it for over $2. I think I sold it for right around what it's trading at now. I know there's been some troubles with litigation against it, shareholder litigation. I'm not sure what happened. I know they're in the specialty tobacco business. They're awaiting approval by the FDA for a very low nicotine cigarette, very low nicotine cigarette that could be used probably to wean off tobacco altogether. So I don't know exactly what other products they have. I think they have a high nicotine cigarette that give you a bigger kick. I think they have some kind of marijuana research going on. I'm not sure what the lawsuit is about, whether it's about the marijuana business, the tobacco business, whatever. But the stock price certainly did collapse from the highs of, what date is this? 10/10. It was as high as 329. Today it's trading at 233. It traded as low as 205. So I have as support the area between 217 and 205. It's trading right at support. Nice big full green candle today. That's what I like. Also, I like the fact that it broke through this strong trend line that it's been following since the beginning of 19. So it's been hugging this trend line, broke through it today, and that's a good sign. A complete break of this 217 level would be nice, with making a new high tomorrow. That would be confirmation of this green candle here. So I'd like to see some confirmation. I think we'll get a continuation. The resistance point, of course, being here. Let me just draw that horizontal line. So I don't think there's much resistance up until here. What was the high? The high was 288. That's a nice move to 288, right? We'll take it. So for anybody who has the courage to buy this thing, despite all the litigation, without looking into the fundamentals, maybe it deserves to be looked at. I think if I were to buy it, I would actually investigate it further. But from the chart, I kind of think it's good. It certainly should get up to its 50-day moving average at about 259. So you swing traders out there, you might want to swing a little with 22nd Century maybe. I don't know. I mean, it might be worth a shot. If I were to buy it, I'd be holding out for a bigger number, probably that 288 level or more. I mean, again, I'd have to get back into the fundamentals a little bit more because I've been away from this stock a long time. And I'm really not sure exactly what's going on, other than the fact that they're awaiting FDA approval. It seems like everybody's waiting FDA approval. I gave a biotech report the other day, and like half of the stocks I talked about were awaiting FDA approval or awaiting a data readout or something. So it's like that. CVM is another one that caught my eye today, made a nice little move. And that too is awaiting a data readout of a phase 3 trial on head and neck cancer. The primary endpoint that's going to make or break that one is overall median survival, overall survival numbers. And that could come at any time, that readout. So those CVM longs sweating it out. I'm one of them, but I'm not in big. But I might just take a shot on adding a little bit to CVM. I don't have the chart up on it, so I'm going to stop right here. I hope you've enjoyed listening to Dr. J pontificate on some of the market goings on for today, January 30th, 2019. I do hope my camera was on the entire time. Sometimes I worry that I'm broadcasting and I'm not broadcasting, if you know what I mean. There was a video I had to delete a couple of nights ago because of very poor production quality. I had my Verizon friend check out the system, and he thinks he's going to do a few things. We'll see what happens, and maybe I'll get some improvement. I think also I'm going to buy a new computer that might help, or take measures to speed this one up. It's already 3 years old and probably somewhat corrupted. In any event, please subscribe to the channel. There's going to be a circular G. Hover your cursor over that, and that'll subscribe you if you haven't already. And I'm going to also have a couple of previous videos posted up on top of this screen in a few seconds. So this has been Dr. J, streaming live from Long Island, New York. Wishing you a great evening. Stay warm if you're in the frozen tundra areas of Long Island or other places. Due north of here, due west of here. And I want to say shalom, sayonara, arrivederci, au revoir, hasta mañana. When I come back for my market report, it marks the end of the month. And in the meanwhile, have a great evening. Let's make money. Good night, all. Ciao.